Welcome back, Bob. Here we are in the beginning of June, and there's the old adage, sell in May and go away. Do you believe this has any credibility?
Yes, I do. Historically, investing from September to May has been historically profitable. From May to September has been kind of sideways to down, so odds aren't in your favor in the May forward period.
We understand you have a top-performing dividend fund. What advice could you give investors before investing in a dividend stock?
Investing in any stock, the key is to try and put valuations into context. So if someone says the stock appears to have a price earnings multiple, and typically what you're going to ask is, okay, what earnings growth is occurring? So it's the PE to growth that you're looking for. And specifically on the dividend front, you're looking for rising free cash flow, which then allows companies to end up increasing the dividends and making sure that the dividend coverage is also at a reasonable level. Typically less than 75% of four-quarter trailing cash flow is something that we use as a metric as well.
What's your outlook for equities in Canada and the US for the remainder of 2016?
We're relatively cautious on equities over the next 3 or 4 months. In part, there are 3 outside technicians that I use and rely on that have been cautious. One is Dennis Mark from National Bank. He points out the kind of divergence between the U.S. indices coming close to hitting new highs, and yet the number of stocks that are hitting new highs continues to narrow. Mark Darriott from Cormark suggests a rotation from equities into gold stocks, and Yelton Fiscal, another company out of the U.S., also suggests the same. Be cautious in equities in the near term and consider a rotation into gold stocks.
You've been a big proponent of technology stocks in the past. What is it about this sector that interests you?
Well, a lot of the tech stocks, there's been the classic Moore's Law, which is that computing power continues to double every 24 months. That continues so that in the past you used to have to spend about $4,000 for a very powerful computer. Now you have to try really hard to spend more than $600. In addition, bandwidth is becoming both cheap and accessible, so you've seen a dramatic increase in the kind of video and YouTube. And also technology is now enabling a lot of kind of disruption, whether it's Uber or many other pieces. It's usually technology that allows a disintermediation of many of the existing kind of businesses that are out there.
In the past, one of your stock picks was Ecotec Photonics, symbol ZMS on the venture exchange. Do you still like this stock?
Well, Ecotec Photonics continues to be a large holding. They've announced that they have delivered the first of a series of chips to a Chinese PET medical scanner company. By the end of June, they'll have a decision by the Chinese manufacturer to go ahead with the purchase of over 200 units over a 5-year period. And also remember that approximately 2 years ago, Ecotec was in a lawsuit with Philips. And out of the outcome of that, Philips has suggested that if they get back into the PET medical scanner business, then they would buy product from Ecotec, subject to quality and price, which Ecotec believes that they'll be able to deliver.
Are there any other stocks that you like at this time?
Following the kind of methodology of the dividend fund, but the stock doesn't pay dividends, one is TO Networks. It's about $175 million market cap. Stock's about $2.10. It's about an 84 million shares outstanding. One of the parts of interest is that they've done a recent acquisition, and the company has suggested that they will end up having a significant increase in their EBITDA for the coming year. And even now, the EBITDA margins are pretty attractive. The stock appears expensive at 16 times enterprise value to EBITDA trailing, but EBITDA has grown by 57% year over year. So to put it into context, the enterprise value to EBITDA compared to EBITDA growth is 0.3 times, which we believe is attractive. It has a 30% trailing return on equity, and we think that EBITDA will end up growing by 66% in the coming year, which then will take down the enterprise value to EBITDA to about 9.5 times, which we think is pretty attractive. The company reports on June 27th. Other companies are Ovivo, which is a water processing company. It's a $123 million market cap. And they reported on June the 1st. Cash is about 20% of market cap. And they're involved in water and wastewater treatment for both municipalities and the industrial markets. And they also end up producing ultra-pure water for the electronics industry. They have a March fiscal year. Earnings are expected to be 17 cents for March 2017, which is about a 13% increase. Looking out to March of 2018, earnings are expected to grow by 35%. At the moment, the company has a very attractive 9.6% free cash flow yield, trades at a 7.9 times enterprise value to EBITDA on a trailing basis. EBITDA has grown by 114% year over year. Companies covered by National Bank, Raymond James, and Scotia Capital. We think there's still great opportunities in the kind of water business. Turning to the gold stocks, we think there's a number of small cap golds that are of interest. And of note is that a lot of the gold stocks are now producing positive free cash flow, which is great, particularly in comparison to many companies on the Toronto Stock Exchange that are struggling these days to make money. Some companies that come quickly to mind would be Golden Star Resources. They traded about 7 times enterprise value to EBITDA on a trailing basis. EBITDA has grown by 145% year over year, and they have a 47% free cash flow yield. So anything over about a 10% free cash flow yield is very attractive. Another one is Pan Am Silver. They are not yet free cash flow positive, but 53% increase year over year in EBITDA appears attractive. First Majestic Silver, they've had a 34% increase in year over year EBITDA. B2B Gold, 57% increase in EBITDA year over year. Royal Gold, basically a 3% free cash flow yield, 25% increase in year over year EBITDA. And the last in the kind of small cap mining stocks, McEwen Mining has had a 61% increase in EBITDA over Flight Aerospace. The reason of attraction here is that Flight is now being installed on a optional basis on the OEM basis with Airbus. They've been installed in roughly 45% of the planes that Airbus has made over the last roughly 2 years. And that is an install base of roughly 400 planes. So most clients are simply using Flight System to provide voice capability to be able to talk to from the plane through to the ground, if you wish. Flight also offers a data capability to be able to track engine metrics, as well as the true black box capability if a plane goes missing. So originally, Airbus says, yes, we're interested in voice. Now they're looking at the kind of recurring revenue opportunity to the benefit of both Flight and to Airbus of approaching Airbus's clients who have the installed systems for data. And in addition, there's a suggestion that Boeing may also be interested in providing this on an OEM basis. We're hopeful that between now and the end of September, there's some news on the front of potentially Boeing also offering Flight's products similar to what Airbus offers now.
Thanks for taking the time for today's interview, Bob.
You're very welcome.